Good day, and welcome to another one of our Answers Weekly Wraps. As per usual, what we'll do is we'll cover three stories from the last week that will affect you and your investments going forward, and finally do a wrap-up of the latest AI news at the end. The three stories this week are going to be SA inflation, UK rate hikes, and finally Jerome Powell testifying. So starting off with SA inflation. SA inflation came in a bit lower this time around. Just still above the target rate of 3 to 6%, but not that much above, like 0.3 above. Good news that we also saw, food prices drop, just below 12%, from close to 14% for rise in the previous period. That's a year-on-year increase of 12%. Now, look, obviously, a slower rate is obviously better, but it's still a 12% year-on-year rise. And I do think that we have to consider the fact that right now, inflation remains a huge issue. We saw, for instance, numbers out of Standard Bank this week pointing out the fact that they are seeing inflation really play a negative role in their customers' lives, as well as they pointed out the impact of rate hikes as well. We've seen, this just corresponds to numbers you've got out of to Capitec as well as African Bank in the last few weeks. So I do think this is something to, just take as a given right now, that the South African consumer is under a great deal of pressure and inflation is not helping. But that being said, getting to about 6.3, we almost at the level at which we can be looking at, below the target, upper band of the target range of 3 to 6%. And, we need to basically hope that oil prices remain where they are. Otherwise, this could obviously be blown out, but oil prices remain, stuck in the mid-70s at the moment. Inflation is not a level; it's a rate of change, and if oil prices, even if the 75 is higher than it were a few years ago, the fact that it hasn't changed from that point is going to be positive. I mean, oil prices are significantly lower than they were a year ago, from about 120 plus to 75, but over like a 3 or 4 year period, it's still above that average from about 3 or 4 years ago. Next, we're looking at the UK inflation number, as well as the UK interest rate hikes. UK inflation came out pretty high. It had one of the highest core numbers ever, if not the highest core number ever. We've also seen, this continuing trend where the UK, for some reason, is an outlier when it comes to inflation. Even in the European Union, which has been worse off than the US. Maybe it has to do with Brexit, maybe it has to do with some other factors, but it has been a noticeable factor. We had a rate hike from the ECB, 0.5%. This is quite large. This is a bit more than the market had been expecting. So obviously they're taking this seriously. And the pushback at the moment is very negative for the Tories. The Tories are the party in power. Rishi Sunak was not elected by the populace. He was basically given the position after his predecessor Boris Johnson, was forced out because of scandal, etc. And so, I do think that this is a situation where the UK is in a bit of trouble, probably more than most places in the world. And the political situation here does not augur well for, any future resolution. If, for instance, right now, the Labour Party was to have, somehow force a general election, they would win the biggest majority pretty much they've had in living memory, more than, the route that Tony Blair had of the Tories back in his day. So this is a very, very volatile political situation. It might lead to some drastic economic activity. We have seen the talk of even things like price controls, which are I would have thought back in the 1970s this had gone out of fashion among any serious government out there, but it's been discussed again. But like I said, this is a desperate situation for the UK, and we might see some more activity coming from them of a more extreme nature. And finally, we look at Jerome Powell's testimony beside the Congress this week. Basically, what he said is what he's always said. It's that he's aiming for 2%. We're not at 2% yet, and he's going to increase rates a bit more until he gets to that point. Going to be data-driven, not looking to cut rates, anytime soon. For some reason, the market didn't, believe him, and so when he did say this again, the market kind of reacted negatively, and we saw, the U.S. markets that have come down for about 3 days in a row or so. I personally also don't believe him, but I think he's going to wait a little longer before he actually starts doing something about, cutting rates than the market really anticipates. The market was basically thinking that he might be doing it as early as this year. I think end of this year, maybe next year, has been he'll start cutting. I definitely expect to do something ahead of the US election in 2024. If you go into a US election in a recession with very high interest rates, with maybe an increase in unemployment, it will be very bad for the incumbent. And I don't think Powell wants to play that kind of role in the US political scene. So I do anticipate there'll be some kind of relaxing of monetary policy over the next little while. Looking at the testimony that he did give, one negative note I did note there was the fact that politicians won't ask him questions directly related to what he was doing. A lot of grandstanding, a lot of other economic issues were raised that weren't really appropriate for the head of the Federal Reserve. But again, this is the U.S. situation at the moment. A lot of how can I put it? A lot of politicization of what should be technical issues, and which doesn't augur well for the country going forward. But right now, I do think that Powell will probably be to some extent influenced by that, and I don't think he wants to be having interest rates at this current level or higher even ahead of next year's general election. When you have like a few months to go. Okay, now here comes my little AI wrap for the week. We're going to cover two stories. The first one is going to be Microsoft. MSRA is the Microsoft Research Asia. Apparently is moving from China to Canada. The reason that maybe people think it's going to be happening is basically there's been a lot of pressure for the Chinese government on researchers working in China. There's also apparently been a lot of poaching by Chinese companies of these researchers from Microsoft's research labs. Which means that, of course, Chinese competitors, if you hire the person knows what they did in the other lab and can maybe help you replicate it in your lab. So that move across, that kind of continues the kind of situation we've seen over the last little while, where there's been a definite separation between China and much of the West when it comes to technology. The banning of the export of computer chips and machines used to make computer chips to the Chinese obviously has an impact. But if you also start removing researchers from the Chinese sphere, it could be quite negative in the country going forward. Most of those researchers, a lot of the researchers are born in China, but I think a recent poll done shows that the majority of highly educated Chinese people would move to the US tomorrow if they were given a green card. The situation in China at the moment is not positive in any means. The economy has not recovered from the COVID lockdowns. President Xi Jinping has made some actions that have made him very, very much feared in the Chinese ecosystem, because he's gone after the people that you thought were almost immune, people like Jack Ma, etc. So I do think that if you look at the overall Chinese economy at the moment, people really don't want to be there. And the fact that we are seeing the big Western companies like Microsoft moving people out of the country to Toronto, etc., I think that won't be that difficult to do. I think people are more than happy to leave the country, especially if they can get access to a place like Canada, especially doing it while working for a large company like Microsoft. I think that at the moment is a real weakness for the Chinese economy, the Chinese government, and they need to resolve it in order to basically maintain any kind of competitiveness, let alone take a lead in the AI space at the moment. You need to keep your smart people around to basically succeed in AI. And if you do things like the Xi government is doing, if you've done things like lockdowns and those kind of things, putting pressure on people, don't be surprised that when they are given opportunity to go somewhere that's a bit safer, where there's less government control of your life, etc., that they're going to jump at the opportunity. Okay. The next thing I want to point out is a raise of funds by a company called Mistral. Now, Mistral was founded by I think one of the DeepMind guys. Was an OpenAI, one of the two companies, an AI researcher, well-known AI researcher. He's starting a team. He's creating a team. So he hasn't done a product. He's getting the team to build a product together. And he got he raised about over $100 million in order to do this. Now, what's important about this is that he's raised this money without having a product, without doing anything, just basically starting off. Normally, if you look at the .com era, you look at previous eras, but somebody's at this stage, they're raising $500,000, not $100 million. They are not out there, raising these huge amounts of money. And why would he be raising this kind of money? The reason is that to do the kind of research that he'd be looking to do, he'd have to get a lot of computer power in there, like graphics cards, etc. And right now, that's expensive. It's super expensive. Remember, I told you that OpenAI, spent $100 million training their, chatbot, GPT-4. So, large language model, we say it's a chatbot, large language model. That's because they need to basically spend that kind of money on the computing equipment, etc., to operate these kind of machines. I think that this is a temporary measure. What we've already seen from Nvidia and recently announced from AMD as well means that in a few years' time we are likely to see, computing power computing power being a fraction of the cost that it currently is. We could easily be seeing, what cost 100 million today costing $1 million in 5 years' time, maybe even less. Just at the rate of speed that we are seeing right now from computers. Okay, it's faster than Moore's law when it comes to AI computing and performance. So it's a really, really, I think, a situation in which the future looks a lot cheaper, a lot more friendly to researchers than it is right now. So what that brings me back to is this valuation we've seen from Mistral. I think this is a big mistake. I think that we are likely to see, those that invested here not make a lot of money from this thing, maybe lose quite a bit of money on this. But it also shows that, it may not be too late to get into AI at the moment. The fact that, a startup requires 100 million investment to get going shows that the technology is not at a rate where we think that the real startup ecosystem is really going to start going in any kind of speed. We would need to wait for the chip, performance to increase relative price quite dramatically, which is going to be happening. Like I said, we have Nvidia, AMD, etc., coming out with these new architectures. And once that does happen, you'll likely see a new flourishing of the smaller startups, etc., out there. But right now, I think you're going to be very brave and maybe even very foolish to look at investing in these startups, especially with the kind of valuations of I think they raised 100 million on I think a $240 million valuation, far too high at the moment. Okay, thank you for joining me, and I look forward to speaking to you guys again next week. Cheers.